Could be. We have Peter Churchhouse with us. He is chairman of Portwood Capital and publisher of the Asia Hard Assets Report, joining us from Hong Kong. Well, thank you so much for coming in to talk to us. So it's certainly not a pretty picture. We have this Chinese slowdown, which appears to be a lot more pronounced, especially on the private sector than expected. On the other hand, so much uncertainty in Europe. What should investors do, given that we already have U.S. 10-year Treasury yield pushing closer to 60-year lows and equities selling off sharply?
Yes, exactly. And we've seen net outflows of funds from the Asian markets and emerging markets generally over the last few weeks. So we're seeing definitely people taking risk off the table again, going back into cash. If one is invested in these markets, perhaps it's areas like the consumption areas, consumer durables, consumer discretionary, healthcare, and so on, where I think the focus should probably be, rather than on industrials and exporters, obviously. And Southeast Asian markets are actually doing a little bit better than North Asian markets at the moment as well. So there's definitely a geographical split here.
Yeah, if there's a geographical split here, and investors are believing that it's going to take time even for the easing to have effect on China to lift some of the different asset classes, what does this really mean in terms of investment? Because China obviously has the muscle to grow further, but it's just not going to be at the pace they were used to.
Well, that's exactly right. And we're expecting growth to be in the 7% sort of range rather than the 8.5% that we've traditionally seen. But however, I think you've got to go look back to what's going on in Europe. If we do see some kind of agreement in Europe on a rollback of the austerity program and perhaps the implementation of a Eurobond system to bail out the European countries, I think we're going to see North Asian markets really have a bit of a pickup here in the back end of this year, and particularly China, Taiwan and Korea, I think have been underperformers. And I think if we do see a solution in Europe, I think those markets are where we'll see a bit of focus back again. China is extremely cheap right now. It's at the low end of its long-term valuation ranges. And similarly, we can see that in Korea as well. And we're going to see in Korea and Taiwan 20 to 30% earnings growth this year as well. So those markets could look attractive if we see a solution in Europe.
Let's get to, Peter, some of your strategy calls. I noticed that you believe in the short term investors should be underweight equities. What prompts that to turn around? When do equities look attractive to you?
Well, I think if we start to see reasonably good numbers in the US, we've seen a bit of a mixture of numbers there, but it seems that the US economy will sort of bumble along at a slightly below long-term growth rates, but at least it's positive. If we see a solution in Europe, which looks very dodgy at the moment, but if we do see a solution there where Greece stays in the euro, we see a rapprochement between Germany and the other European leaders, I think we're going to see equity will be back on the table again, and we'll see risk on the table as a result of that. But in the short term, over the next 3 or 4 weeks, I think people are very, very nervous about risk trades at this point.
So what should investors be doing with their money then, Peter, over that period?
Well, in the short term, I think you're going to see investors holding a lot more cash. We're certainly seeing that in a lot of the institutional asset management firms. And I think the focus is on consumer areas, areas such as utilities, consumer durables, technology, that kind of thing, rather than the focus on the trade and the industrials that we typically see here in Asia. Also, I think we're going to see continuing weakness in commodity markets, so the commodity stocks in this part of the world are probably likely to be underperformers, certainly in the short term at least.
Okay, Peter, thank you for that. Peter Churchhouse from Portwood Capital.